Whoa, buddy. Put that thing back in its holster. We haven't gone anywhere.
I don't understand.
Check out the MichaelDukesShow.com for information on how to get access to the podcast.
Welcome to the party, pal.
The Michael Dukes Show.
The greed and the entitlement is astounding to me.
What more could you want from a low-budget radio program?
This is a dumpster fire.
That was just BS.
It is time to get a new perspective.
We know just what you need, and we've got just the cure. Open wide and prepare for a steaming hot cup of freedom.
I just don't fathom it.
The Michael Dukes Show, streaming live across the world.
Oh, yeah. Live around the world on the internet at MichaelDukesShow.com and across the state of Alaska on this, your favorite radio station and or FM translator. Hello, my friends. Good morning. It's the Deep Voice Morning. That's right. We're ready to go. It's the deep dive into Tuesday, which kind of feels like... I was thinking about it last night. It kind of feels like Groundhog Day, right? I mean, isn't it like the same? We're just keep battling away at the same thing. Maybe we're making some progress. We're doing our best, and we're not going to stop. We're going to keep going. We're going to keep on keeping on. Brad Keithley from Alaskans for Sustainable Budgets will be joining us here in just a second for the weekly top three, the big three things for this week that we should be focusing on. And we're going to dive into that here in just a moment. In hour two, we'll have some recap with some of my thoughts. And then we're going to finish up, as always, on our Tuesdays with Chris Story, who's going to give us our weekly positivity boost, our PMA, our uplift. That's what's coming up here in just a few moments, just a little bit here. Don't forget, you can join us on the in the chat room as well today, facebook.com/MichaelDukesShow/live. If you want to jump right into it, and we would love for you to be part of it. Meanwhile, let's get to it. The floggings will commence, the beatings will commence until morale improves. That's the word. And Brad Keithley from Alaskans for Sustainable Budgets joins us. He's not a bad guy. He just, he just lays down the truth. You can't handle the truth. I mean, that's the problem, right? That's what it comes down to. Right, Brad? We just can't handle it.
That's quite an intro, Michael.
Yeah, I know. I'm here to help. I'm just here to help.
I need to have some sort of helmet on or something.
Yeah, exactly. I know. You just need to make it happen. All right, Brad. Well, let's get it. And I'm sorry I didn't see your previous. I was in the middle of three things when you sent that question about the microphone. You sound good this morning. So let's we'll get into it here. The weekly top three, and it all starts off with where is oil going? And what I mean by that is the price of oil, because of course our whole economy is built on this madness, and here we are, this command economy, and we're kind of at the mercy of it. So tell us what's happening in the oil situation. Where do we go from here, my friend? Where do we get started?
A couple of months ago, we talked about on the show the latest Energy Information Administration for price forecast for the following. I think they do it for 18 months, year and a half forward. And the August forecast from EIA was significantly different from the forecasts that had been making up until that point. It reflected the impact of the OPEC production increases and showed a significant softening in the market as a result of oversupply, significant softening in the market and a significant drop in price to absorb that additional oversupply. Futures prices were up in the high 60s, touching 70 at the time. And I know a lot of people discounted that projection. EIA came back and did it again in September and made the same projection about where price was going. And prices had softened a little bit in the futures market at that point. And now they've come back again in October and continued to make the same forecast. And what we're beginning to see is the futures market is beginning to trend down. Not as far as the projections yet, but the trend from where it was and where it is now gives you an indication that it may be going where EIA thinks it's going. EIA is what EIA is seeing, and what the IEA, another energy source, is doing, energy analysts are doing, is they're seeing this OPEC production really hitting the market hard, resulting in storage buildup because there's no place else for it to go. And when you're building storage, that really softens the price because people would prefer to sell the oil rather than put it into storage and incur the storage fees for an extended period of time. So it really impacts price. And what EIA continues to see is the OPEC production continuing to stay high and continuing to build storage and bring the price down. What happened the last couple of months is two things. One, you still had summer demand, summer refinery demand. Refineries, oil demand is strongest in the summer, in North American summer, because of gasoline. So you still had summer demand, and that was sort of masking what was going on. And then the Chinese have been building their own storage, have been buying oil on the market and putting it into storage. Some people describe that as the K oil industry, with real oil demand, consumption demand going down or softening, and the Chinese demand going up as a result of storage. But both EIA and IEA see that storage, see China sort of nearing the end of that storage. And as a result, they're continuing with the price projection. If you have the chart and can throw that up on the screen, that would be great. You were just waiting, weren't you? Sorry?
Go ahead. No, I was just waiting for it. Go ahead.
So this is the EIA forecast from October, from last week, and it shows prices continuing to soften. It's divided into calendar quarters. As we all know, the Alaska fiscal quarter runs from the middle of the year to the middle of the next year. So the beginning of 2025, really the line that they have in the middle is the beginning of the Alaska fiscal year. It's the middle of the calendar year, but the beginning of the Alaska fiscal year. And you can see over the course of the Alaska fiscal year, their projection coming down. The latest, the October projection has the average for the year, has it coming down to an average of $52 in the fourth quarter. And the average for the year in the EIA forecast is $59 a barrel, Brent. That's compared to the initial forecast, the initial spring revenue forecast of $68 that was forecast at the time that the spring revenue forecast came out, and on which our budget is based. And it also compares to the $64. If you'll recall, after the legislature passed the budget out, Department of Revenue came out with a different forecast than the spring revenue forecast, a revised forecast for FY26, took it down to $64, and the governor's vetoes were based on that $64, the revenues coming from the $64. So the legislature, you can see it in the Ledge Finance publications, the legislature still thinks that we're at $68. The governor's budget, which the legislature partially rejected, was at $64. And now EIA is telling us that we're headed toward $59. The current futures market is at $64 average for the year. So it's down certainly from where the legislature thinks the market is. It's the same price that the governor's vetoes were based on, but EIA is telling us it's going even lower. The result of that is that if EIA plays out, and as I say, the futures market seems to be increasingly believing that's where the market is going. If that plays out, then we're talking about UGF revenues, unrestricted general fund revenues. The legislature thought that they were going to be at $2.33 billion. The governor's budget was based on $2.1 billion, down $230 million from that. But EIA's forecast is now sending us down to about $1.9 billion, a little bit over $1.9 billion. Long way of getting to this. People are still acting as if oil prices are going to be high for the year. Right. The legislature is still acting as if they're going to get $68. The administration said it was $64, and then you have the Department of Revenue, former Department of Revenue head Adam Crum going off and investing $50 million out of the CBR because he said, "Oh, we're not going to need it." Well, we are going to need it. I mean, if these prices keep going down, we're going to have a very difficult FY25, and the EIA forecast for FY26 rather. And the EIA forecast for FY27, the current EIA forecast for FY27 is $53 a barrel, even lower. So those who are running around thinking, okay, we're going to be okay, and you know we're gonna get through this okay. Prices aren't going to be great, but we're going to get through the very tight budget, as some said, that we passed this last year. If prices keep going in this direction, and EIA is telling us again and again and again that's where they're going. If prices keep going in this direction, we're going to have a very difficult spring next year as everybody sort of wakes up and says, where did all the revenue go? And we're going to have an even more difficult time heading into FY27 with prices projected at $53 a barrel. It's going to make for a very interesting election year.
Well, I mean, this is what we've been saying for the last 10 months on this program, that the next year is going to be, in some ways ultimately brutal, and we should be prepared for it. And yet they, and it was mentioned during the last session. I mean, Bert Stedman was like, well, we know it's going to, but we don't want to pay attention to that. Don't pay attention to that. We want to focus on this year. Again, the short-sightedness, it's mentioned in passing, and then it's a shock, I tell you, that we're out of money and we don't know what to do. That's kind of this is like a redo. Like I said, Groundhog Day.
Yeah, the supplemental, when Ledge Finance issued their last newsletter, they were talking about what was going to be needed for the supplemental. And they said, well, of course, we have this reserve this surplus that was set aside in the spring budget based on $68. We have this reserve, but we're even going to outspend that on the supplementals. The supplementals are going to be bigger than the reserve we set aside, so we may have to go into the CBR some. Well, that's based on that statement's based on $68. They continue to rely on the spring revenue forecast as opposed to the revised revenue forecast that Department of Revenue came out. That's not true at $64, and it's certainly not true at $59, which is where EIA tells us we're now going. So it's going to be a big wake-up call next spring. And legislators, I mean, this is really pitched to legislators and staff out there. You guys need to stop. You guys need to stop and sort of suck in some air and think about where this takes you. If this is where prices are going. Maybe not. Maybe they aren't. But I would stop with we got money to do this, we got money to do this, and we got money to do that, and we'll be okay. Don't worry about it. It's all based on $68. You need to back up and take a breath and really think about what you're saying.
Brad Keithley, Alaskans for Sustainable Budgets, the weekly top three. I think we should leave it there for number one. We're going to move on to number two in just a moment. Don't go anywhere. Brad Keithley continues with us. We'll be back with more right after this. Again, don't forget you can join us on Facebook or YouTube or Rumble. You can always pick up the live stream over at michaeldukeshow.com. Back with more right after this.
Listened to by more staffers in Juneau than any other show because their bosses told them to. And after what they just heard, oh man,
they're going to be pissed.
You're a bad, bad man.
The Michael Duke Show.
Okay, we are in the commercial break. Brad, take your right earbud and that wire and see how it's bumping into your chin right down here.
Yeah.
Yeah. Bend the wire out a little bit so that it's the one with the box, the little microphone on the earbud. You see the microphone box down on the wire?
Yeah. Let's see if I can do it this way. Maybe
I wanted you to grab the wire and kind of just stretch it a little bit because it's bumping into your chin and it sounds like wind because it's bumping on your chin. But just bend the wire out a little bit and just bend it. Yeah. You know what I mean? No, I don't mean like hold it there. I mean like just you can take the earbud out and stretch it a little bit.
I see.
And then so it's not bumping into your face. That was all I was saying. Because it sounds like when it bumps into your face, it sounds like a little bit of wind. The microphone sounds good, but yeah.
Is that better?
That's a little better. Yep, that's better. Yep. So I know you got a new set of earbuds. It looks like because they're all like it looks like it was looped together, wrapped up real tight. So
yeah,
sounds good. Okay. Yeah. Yep.
I'll spend the entire break doing this.
That's horrible. Horrible. There's a horror. Okay. All right. No, that's good. That's good. We're all good. All right. No, Brad, as I look at this and I just keep seeing these numbers, and this is actually, it seems like this was just slightly better than what we had considered in our previous discussion of IEA, because they had talked about the oil being down maybe in the low 50s. So this seems like this is even a little bit brighter than what they were anticipating before.
Well, I sort of, by cutting it off, by giving you a fourth quarter average, I sort of made it a little better. The April, May, let's see, the March and April prices are $51. The May and June prices are $52. And if you go over to the WTI, those prices are lower, but we need to focus on Brent. So yeah, it's come up a little bit from where it was in August, but that little bit isn't worth a whole lot in terms of UGF.
Right. Well, and they've got to pay attention. They've got to wake up to where they're at, and where they're at is there's not going to be a whole lot of bailout coming from some kind of big oil prices. And you mentioned this, and I know you're going to get into it a little bit here in the next segment. You mentioned this this thing with Crum. This has kind of been a crazy thing. I mean, at one point, I agree with him. If they get down to the last $50 million in the account, then they've got bigger problems. But at the same time, what was going on here? What was with this $50 million? I mean, that nobody seemed to know about, or that everybody seemed to know about and nobody wanted to talk about.
I think it's Crum trying to be a big shot. I think it's Crum trying to say, hey, I'm the commissioner of revenue. I've got, all this money at my disposal. I can invest it how I want to. This is the type of investment, as we've drained down the CBR, really what we've said to ourselves is the CBR is going to be our cash investment. We're going to hold it in cash or near cash, liquid assets. And that's going to be our cash investment. And we're going to invest for the long term using the permanent fund corporation. And I think this is Crum sort of saying, well, maybe I couldn't get this through the permanent fund corporation, so I'll just do it myself through this investment. I don't know. Maybe we're going to see this get worse, and maybe we're going to see the people who Crum's invested with show up as big campaign donors, and then that'll set off all sorts of additional alarm bells. But even if we don't see that, what we're going to have seen is taking what we really have been preserving as our cash account for emergencies and for oil price drops and things like that. We're taking a portion of our cash account and we're setting it aside into a long-term investment. That's something that we've said we just weren't going to do,
right?
As we've taken the CBR down. So Crum for whatever reason, and I think it's just because he just wanted to be a big shot and say that he could do this. I'm the revenue commissioner. I can commit this money. But for whatever reason, it's a stupid move, especially in light of where oil prices are going.
Well, we'll see what happens here. We're about to rejoin the radio. Brad Keithley, Alaskans for Sustainable Budgets. Let's continue on. Number 2 is dead ahead. The Michael Duke Show, Common Sense Radio.
Public enema number 1. Oh, wait, sorry. Public enemy number 1, which makes more sense. On the other hand, he's a little bit of a pain in the Michael Duke Show.
All right, we're continuing right now with Brad Keithley, Alaskans for Sustainable Budgets, in the weekly top 3. Number 2 is on the agenda now. We just finished up with number 1, which was where was oil going? And now Brad says somebody needs to look at the financials of all these projects that we've got going on out there. And we were just talking about this the other day, right, Brad? I mean, the whole gas pipeline, and we still haven't seen the updated finance. But somebody needs to look at the financials of all these projects. What do you mean exactly?
Well, there's been a series of headlines that just sort of, every time I see one, I rush to the paragraph that talks about how we're going to pay for it. The most recent one was the Ambler Road. I mean, Trump made a big deal out of reversing Biden and reversing the protections that Biden had set on the road, and opening up the opportunity for the road. And people are now talking about it as if it's a done deal, but the feds aren't paying for it. I mean, they've opened up the permitting for essentially the state to pay for it. And the same problems that we had before, I wrote a column on this a couple of years ago when Ambler was hot and heavy at that time. The same financing problems that we had then are still around. The road is not going to be cheap. It's going to be at least $300 million. There's some estimates that say it's going to be 500. Some estimates that say 700. There's even one estimate out there that says $1 billion. And so you can discount the high end of those, but where's the 300, 500, 700 billion going to come from? AIDA has said that they're going to issue bonds for it, and the bonds will be financed on the back of toll road agreements that they're going to enter into with the mines. But the mines that are out there, the potential mines that are out there, are not yet permitted, and the 2 mines that people talk about most are really small deposit mines, short-term mines that would not be enough either in volume or in time to pay out $300 million in bonds. Also, where are you going to get the money? AIDA says it's going to borrow the $300 million by issuing these bonds. Bondholders are going to want to know that there's a pretty good certainty of payback. And so they're going to look at the mines themselves. They're going to look at the same thing that I just talked about. The mines themselves, where they are in the process, what the deposits are, the projected deposits are, how that's going to, how much of the toll road that's going to pay for. And the bond issuers are going to be skeptical about getting it paid back. So they're going to ask for additional assurances, additional guarantees, additional backups. And I think what we're seeing is sort of maybe unintentionally, but maybe intentionally, we're sort of seeing the same thing from all of these projects. They're building up public expectation. They're building up public, enthusiasm for them. They're building up public desire to see them go forward. They're going to say that, President Trump unleashed it and we're going to do these. And then all of a sudden we're going to look at where the hell is the money coming from to pay for these things. And we're going to see it start backing up on the legislature. And they're going to say, oh, we got to do Ambler. President Trump authorized it. We got to do Ambler. Bond market isn't there yet. The mines aren't there yet, but we got to do Ambler. So we're going to need some additional money out of the legislature and a guarantee out of the legislature to back up these bonds. I see the same thing from the LNG project. I see them going down the road, building up enthusiasm, holding community events, getting people excited about it. But there's things that the LNG project is going to want from the state. Not the least of which is a change in the property tax assessment or property tax rate on pipelines, which the Wood Mackenzie study that was done last year to support the numbers that said that it was sort of competitive coming into South Central. They already assumed that those projections assumed that the property tax relief, the property tax rate would be lower for the gas pipeline than for the oil pipeline. So I think what we're seeing is the front ending of a lot of enthusiasm about these projects, and the expectation that once they get if they can get the enthusiasm whipped up enough to the point that people are going to be demanding them, then they'll just take it to the legislature and say, you got to follow through on this because we build up all this expectation. You've also got people like Shelley Hughes. There was an article in the Ketchikan paper where Shelley had been down campaigning in Ketchikan, and she said, "Oh, we need to have a capital budget again. We've only had these skinny capital budgets. We need to be building things again." You've got, Port McKenzie is building back up again. They're having public tours and trying to sell the project again, all of which is dependent on state financing. There's one other piece of this that when I start fitting the puzzle together, you start seeing these articles by Bruce Tancheman and by others about we can't afford the PFD anymore. The PFD needs to go.
Right, I saw that.
And we need all this money. There's a link between those two. There's a link between people, wanting to get on with these infrastructure projects or just projects in general, wanting to get on with these projects. Shelley wanting to do a capital budget, everybody wanting to get out there with these projects, building up the enthusiasm for it. And on the other hand, people starting to, try to say, well, we can't afford the PFD anymore. And the link is that's the funding source that people have in mind for how to support these projects when the enthusiasm builds to the point that they come to the legislature and say, oh, that project, that Ambler project that we want to go forward with, that President Trump approved, that everybody is expecting now to, turn dirt next year. What was it? The Secretary of Interior said it'd be built next year. These projects, well, we just don't have the money for it. Would you? And so you're going to have to come up with the money. And so they're going to link that together with the anti-PFD folks. And all of a sudden, whippo bambo, the PFD is going to be gone, and we're going to be spending it on all these projects that don't pencil out, that we need money for because nobody will lend us the money because the project isn't firm enough to be financeable yet. So I can just see this building, and I can see these two things moving in parallel, and it bothers me. I mean, because we don't have a financial plan for Ambler. We don't have a financial plan for the LNG line when right. The LNG folks come to the state and say, you need to give us this, that, and the other thing to make this line.
When they come to the state. I mean, we still haven't seen the updated, right? I mean, we still haven't seen the updated metrics on that. What is it actually going to cost? We have no idea because nobody's actually even brought it forward. But don't worry, it'll be spectacular. It'll be spectacular. We're guaranteed that.
Yeah, and so I saw one post that said, "Oh, we need the Matsu port. We need the Port McKenzie desperately." Okay, who pays? Who's going to pay for it? Well, we need to cut out the university. We need to cut the university back. That's not going to happen. I mean, people who are advocating these things and their explanation of how they're going to pay for it is we're going to cut something else. They're just living in dreamland. They're really those people who are out there building these expectations without financial underpinning for it, other than we're just going to cut somebody else. Those people who are building that out are really building up the steam that's going to result in the elimination of the PFD. It's going to result in the switch over to the second parallel stream of people talking about eliminating the PFD. And you can if you piece these things together, you can see it coming. So if somebody believes in the PFD, as I do, and believes in the importance of the PFD and the importance of the role the PFD plays in the Alaska economy and to Alaska families, then we need to be skeptical. I am skeptical about these projects going forward without a strong financing plan, without their own strong financing plan, without ADA being able to issue the bonds without recourse and that sort of stuff.
I mean, if you were the Mad Emperor for a day, would you mandate that any one of these projects have to have some kind of fiscal note or plan attached to it that said, and here's how wouldn't that be part of the whole pitch to it? I mean, if you're doing a pitch deck, I mean, because I've built a few pitch decks over the years. If you're pitching something, in some kind of sales thing or whatever, you've always got a page that talks about the breakdown of the costs and how it's going to get paid for and what the ROI is going to be. You always put that in there somewhere. It's usually near the end because that's when you're asking for the money. But, there's always something built in. I mean, shouldn't this all be part of it instead of this pie in the sky? We're going to build skyscrapers to the moon, and then we never talk about how it's going to get paid for.
Yeah, Ada in particular should be doing that. I mean, so and about Ambler in particular, what Ada says when they're asked about the financing with Ambler is, we're going to issue bonds, and we're going to toll road. The road's going to be a toll road, and we're going to pay for the bonds with the tolls. Yeah, but you need to have mines. I mean, anybody who's going to buy these bonds is going to say, yeah, but you need to have mines at least permitted on these roads, and they need to be of sufficient volume and sufficient size that they're going to pay it out. I'm not going to lend you $300 million or $500 million or $700 million based upon, just a statement that says, it's going to be a toll road, don't worry about it. I want to know who's going to be paying these tolls, and I want to know that there's going to be money behind those people, revenue behind those people, in order to pay the tolls before I issue the bonds. And I'm going to say, as a bond buyer, I'm going to say, look, if you can't show me the money in terms of mines permitted and in terms of volume of production that's going to pay out these tolls, then I tell you what, give me a guarantee, give me a state guarantee, and I'll buy your bonds. But what we've done then is just really commit the states, commit future revenue sources to underlie these bonds. People say, we did it over at Tech Cominco. We did it over at the Red Dog mine. Well, the Red Dog mine, before we issued those bonds, the Red Dog mine was almost completely permitted. It was scoped in a way that they knew the volume of production that was going to come out of there, and they knew that volume of production was enough to pay the bonds off. So yes, we got bonds for that toll road, but it was in a much different place than Ambler is right now, and in a much different place than Ambler is likely to be in the next 4 or 5 years. So if Burgum's out there saying we're gonna build this road next year, I don't know where the money's going to come from.
Is the federal government going to? I mean, if he's saying that, but is the government going to pony up with the money, or is it just this is all aspirational at this point?
Oh no! When they were asked, they said, it's going to be a toll road. They did the Ada defense and said, it's going to be a toll road. Don't worry about it. Yeah, well, you got to have volume on the road to pay the tolls to support the bonds, and we don't have that.
Right.
And so as I say,
and the whole
I'm concerned we're going to get all this build up and all this expectation, and then Ada's going to say, well, we can't sell the bonds because we don't, and then everybody's going to say, well, legislature, you need to come back this up. You need to make it happen because we have all this expectation on all these people out there who want jobs and they're ready to go.
Well, and I can see another problem with the legislature and everything else. Frank brings it up in the chat room. He said the issue with the Ambler Road is who gets to use it. If the state and the federal government build the road, it would have to be open to all the public. If it's built by private sources and it's a toll, they can control who uses it. And that's part of the problem as well. And I could see that being a sticking point with somebody in the legislature. We've got to have public access to it. And I mean, it just, again, this is not all built into it. They should have all this laid out before they come out with these big, huge aspirational plans. You got to have a way to make it all work.
Yep. And we're certainly building up the aspirations. We're certainly building up the expectations. And we just don't have the money to back it up. And the projects aren't at a point where they can back it up themselves, at least in the case of Ambler. And certainly in the case of AKLNG also, they're not at the point where they can back up their projects. But we're going to build up these expectations. We're going to start all these trade schools and education courses to get everybody ready to go. We're going to, everybody's going to be sitting there at the starting line ready to go. And then Ada's going to say, but we don't have the money. So legislature, bail us out. And then the people who say, kill the PFD are going to kick in and say, we got the money. Let's go.
Right. Brad Keithley, Alaskans for Sustainable Budgets, the weekly top 3. That kind of winds up number 2. Although, I mean, we could go on for an hour about this one subject alone. which kind of gives us a tease for number 3. There's a new series on Alaska's Permanent Fund called The Great Debate. John Faulkner over at Must Read. Give me a tease for number 3 here, Brad.
Yeah, John wrote this piece and teased it as the beginning of a series on the PFD. I've got real problems with part 1, so I'm not sure I want to see parts 2 and 3. But we're gonna talk about part 1 and why I've got problems with it.
Okay, all right. Well, we'll see where it goes from here. We got to move forward. We'll be back with more. The Michael Duke Show, common sense, liberty-based, free-thinking radio. Brad Keithley is our guest. We return with more right after this in the weekly top 3.
If you missed the show, you can listen to it on your time with Dukes On Demand. Oh, and it's free. Like America used to be. Streaming live every weekday morning on Facebook Live and MichaelDukesShow.com.
Okay, Brad Keithley, Alaskans Faux Sustainable Budgets. Let me see here. Rare earth, match any and all guarantees. David says it seems that the railroad line would be more cost effective and would ensure that the public would not be able to use it. But again, who's going to build it? And railroad, I think historically is much more expensive than an actual road system, or it's significantly more to build a railroad. David, that's part of the problem.
Well, and where's the financing for the railroad?
Yeah, exactly. I mean, how do you build it? That comes back to the big issue. Who pays? Where does it come from?
Yeah. It's
Brian says, how about we start with any plan? Oh, wait. Cue the Alaska study industry, right? Because we're going to study the study that we studied before to study the previous study that we studied once before. I mean, that's exactly where we're at. There's a whole industry baked up around that. Maybe the $50 million Crum just threw down the crapper would be a down payment on the roads. That's it. But I will say this, Brad, one of the interesting things that came out of this discussion about Crum and this $50 million was we got a little bit of a peek at the very end of this article in the Alaska Beacon, where they were talking about this specifically, was that Andy Josephson was talking about it, and he said he didn't think that the legislature will need all of the CBR, but he says he thinks there's a great concern about the fact that we need readily available cash, and that's what the CBR was designed to provide. And he goes on to talk about, Crum and the governor's veto and everything else, and he goes, it's just that we're suspicious. We don't know when we can have our $50 million back. This is the attitude. This is all our money. We want our $50 million back. We didn't want somebody else. It's okay if we spend it, but we didn't want somebody else to have when are we going to get our $50 million back? I mean, was it me, or did the hairs in the back of your neck just go like that when he said something like that? Because that's the attitude, right?
Yeah, exactly right. And in terms of, the statement, we won't need it this year. Well, look, the EIA forecast for next year, or for oil next year, is what, $53 through FY27. So we may not need it all this year. God hopes we don't need it all this year, because we're going to need some of it next year. The spending is projected to go up. We have supplementals that are projected to hit in the spring, and we're going to be facing $53 or $55, or just pick a number in the 50s, any number in the 50s, even the high 50s, and we're in deep crap. So, yeah, the $50 million. I mean, Crum's defense of it's just $50 million. That's not much of a defense, because after the end of this year, depending upon what they do with the FY27 PFD, after the end of this year, we may have less than $100 left in the $100 million left, less than $1 billion left in the CBR.
Right.
And so where do you go from there if you're facing another year of $50 oil? Yeah.
No, and the irony here is that, well, it was only 50 million, and I was trying to get us to cut above inflation and blah blah. And I'm like, with just 50 million out of a multi-billion-dollar fund. You were trying to, we're not even keeping up with inflation kind of thing. This was just some kind of test bed that you approve 3 days before you leave off. I mean, it just is so weird. The whole thing is just so weird. Maybe it was him just trying to put on his big boy pants. I don't know. I'm confused by it.
It is. It's weird, especially. I mean, he's on the Permanent Fund Corporation board, right? And he understands the role of the Permanent Fund Corporation is to make these long-term investments, to make these plays in combination with other plays. Risk weight the whole thing. They don't do a good job at it, as we've talked on other shows, but nevertheless, risk weight the whole thing, and always make sure you have some hedge against a high risk bet like that. And he knows that, and yet he decided out of the CBR, which generally was considered to be the cash account that we kept for emergencies, out of the CBR, he's going to make this $50 million bet instead of the Permanent Fund Corporation. If he thought it was a good bet to make, then he would have made it. He should have made it through they should have made it through the Permanent Fund Corporation. But for whatever reason, and it'll either be sinister if you see that there's been donations made by the people to whom he committed the money, or not sinister if there aren't, but still sort of odd.
Well, that's the thing. It's weird. It's not, like I said, if there's no connectivity through campaign finance or something like that, but just why? And maybe you hit on it. Maybe he just wanted to put on the big boy play. I can play with the big boys. I'm the, I just don't know. I'm trying to wrap my brain around it. And
that's sort of been Crumb's MO. I mean, we've gone through how many tax directors, we've gone through how many deputy directors of revenue. I'm the one. I make the call. I'm the.
We're gonna get back into it. Here we go. The Michael Duke Show.
The Michael Duke Show. Not your daddy. Wait, sorry. Not your daddy? Ooh, not your daddy's talk radio. Whew. I was scared for a second. Thought we were going down. Here's Michael Dukes and the show.
Okay, we're continuing now. Brad Keithley, Alaskans for Sustainable Budgets, the weekly top 3. The Great Debate. That's what Must Read's John Faulkner is calling it. It's a new series of articles that he's writing. He said this is the first in the series that frames Alaska's great debate regarding the permanent fund. The series will invite debate but promote a protective view of both the management of the corpus and the original dividend plan. We start this series with inflation proofing, a topic which has broad consensus and clear legal direction. But Brad, you have questions.
Well, so inflation proofing has been used by the Permanent Fund Corporation as a justification for moving to a one account fund. And the way they've used it is they've said, look, the way historically we've done inflation proofing is we've taken cash out of the earnings reserve and we've transferred it over to the corpus in order to inflation proof the corpus. And so the problem, says the Permanent Fund Corporation, is that's taking too much cash out of that plus the PFD demand on the earnings reserve is taking too much cash out of the earnings reserve to move over to the corpus. We can solve that by just consolidating the two funds together, and we won't run out of money in the earnings reserve. It's also been the need for cash for inflation proofing has also been a justification. The need to take cash out of the earnings reserve and move it over to the corpus for inflation proofing has also been a rationale that many have used to cut the PFD, because you have the earnings reserve. You only have so much cash in the earnings reserve, and if you're trying to fund the PFD and you're trying to fund inflation proofing, the argument is you'll run out of cash. So particularly when the permanent fund's not earning enough, permanent fund corporation's not earning enough to refill the earnings reserve at the rates are taking it out for those two things. So what we need to do, says those, we need to cut the PFD in order to leave enough cash in the earnings reserve to move it over to the permanent fund corpus. We don't need to do that. We have inflation proofing is a non-cash item. It can be satisfied either through cash or through appreciated assets. And we have a lot of appreciated assets on the books. And as long as your appreciated assets are earning enough, there's enough appreciation in your assets, unrealized gains, there's enough appreciation in your assets, then you're inflation proofing the corpus through the appreciated assets. And I wrote a long column, or a couple of columns, a while back that analyzed the amount of unrealized gains or appreciated assets that we had in the Permanent Fund Corporation, and reached the conclusion that there's nearly enough of that generated every year, appreciated assets or unrealized gains, nearly enough of that to cover inflation proofing. The cash need, the supplemental cash need to cover the remainder of inflation proofing is relatively small. And if you do it that way, if you use the unappreciated assets to cover inflation proofing, the non-cash item of inflation proofing, and preserve your cash, not only do you not run out of it in the earnings reserve, you start building the earnings reserve back up, and there's enough cash to cover the PFD. You don't get people saying, "Oh, we need to cut the PFD in order to create cash to move over to the permanent fund corpus." So in the article, John's arguing that we've got to do cash inflation proofing, that we've got to have cash, that we've got to cover the inflation proofing requirement through cash. And that's just playing right into the hands of those, A, who want to cut the PFD by arguing there's not enough cash in the earnings reserve to do both, and B, playing right into the hands who want to consolidate the permanent fund into a single account by arguing that as you continue paying cash out of the earnings reserve, you're draining it down to the point that you don't have enough cash left in the earnings reserve to cover your requirements. I wouldn't think that John would be in favor of either of those. I mean, in the past, he said he supports the PFD.
Right.
And I wouldn't think he would be in favor of a single account, because the single account opens a back door into the permanent fund corpus. We've talked about that a number of times on the show. So I'm not quite sure what John's doing. I mean, from a general standpoint, cash is always better than appreciated assets, but appreciated assets are valuable. They've earned. I mean, the appreciation is the earning. You just haven't realized that earning by selling the asset yet. But those earnings are real. Those earnings are there. They're embedded in the asset. They're continuing to be invested by leaving your investment in that stock and watching it continue to rise, or that asset, and watching it continue to rise. So, I mean, from an accounting standpoint, unrealized gains, appreciated assets are as valuable as cash if you don't need them for something that you need to pay out. And we don't need to be paying out the inflation proofing.
Right. Well, and again, just to be clear, he doesn't advocate in this article per se for a single account, but as you say, he's kind of playing into that argument by, talking about inflation proofing. And the one thing he also doesn't talk about is the transfers. I mean, we transferred $8 billion out of the earnings reserve into the permanent fund corpus. And it was ostensibly, in fact, it wasn't just ostensibly, it was blatantly said that this was for future inflation proofing. And then they conveniently forgot about it a year later or 2 years later. They conveniently forgot about the billions of dollars that they transferred over and started talking about inflation proofing again, which again goes back into our theory that somebody wants the corpus to be combined. And this is a way to kind of create that crisis kind of thing. So, I mean, I don't understand it either. And it begs the question of, why are we so focused on that? Why would that be the starting point of a discussion on the permanent fund?
Well, maybe John thinks it's the non-controversial one. I mean, he does say we start this series with inflation proofing, a topic which has broad consensus and clear legal direction. Well, it doesn't have, I mean, to the extent anybody listens to me, it doesn't have consensus, because it's a bad thing to do, because it leads to PFD cuts, and it leads to the argument for the combining the two accounts into a single account. And clear legal direction, I don't know. Earnings, what the Constitution says is that the legislature shall deal with the earnings off of the corpus. Well, earnings come in two types. They come in cash If you cash out an asset and realize the gain on it, they come in cash, or they come in unrealized gains, appreciated assets. And those are, from an accounting standpoint, those are the same thing. I mean, they are the equivalent. So in terms of clear legal direction, I don't know if there's clear legal direction. Certainly not from the Constitution. Well, there's not clear legal direction that you have to use cash.
And isn't there some conflicting? Because I mean, I thought under SB 26, which was the POMV draw, there was a whole change to the inflation proofing component anyway, right? I mean, so now you've got kind of dueling statutes, and there's a different way to handle it. So is there clear legal direction? I guess depends on which statute you're paying attention to.
Yeah, I mean, everybody talks about these dueling statutes. They really aren't. They can be reconciled. But I don't. I mean, there's not clear legal direction from the Constitution, at least. There's not clear legal direction that you have to use cash to cover inflation proofing. In fact, the Constitution doesn't talk about inflation proofing at all. It just talks about maintaining the corpus, that you can't spend the corpus, and it talks about the earnings, and the legislature can do whatever it wants with the earnings. I agree that inflation proofing is useful. I agree that it's important. It just doesn't have to be done in cash. And there are significant downsides in terms of draining the earnings reserve, and in terms of putting the PFD at risk by requiring that you use cash for what essentially can be is a non-cash requirement on the other side.
We got 2 minutes here, Brad. What would you say to John Faulkner if you ran into him at the store and said, "Hey, I read your article and I don't understand," or what? Give me the 90-second version of what you would say here.
John, I don't understand why you're arguing what you're arguing, because A, it plays into people's hands on cutting the PFD, and B, it plays into people's hands on consolidating the two accounts and opening a backdoor into the corpus. I thought you were against at least one of those, if not both of those. So why are you supporting something that leads to both of those together? Doesn't need to be cash, John. It can be appreciated assets or accounting gains, and we can satisfy inflation proofing with it.
Brad Keithley, Alaskans for Sustainable Budgets, the weekly top three. Brad is still out there in his happy place out there on Cape Breton, and I hope you enjoy a fantastic week of. Is it music this week too, Brad? Or are you getting ready to come home?
Nope. It's music this week. I'll be here again next week, and then I'll come home.
Okay. All right. Well, I hope you have an amazing time in your happy place. Thank you so much for coming out and being part of it today.
Thank you, Michael, for having me.
All right, folks, we got more coming up. Hour 2 is dead ahead. The Michael Duke Show, Common Sense Radio. Tomorrow, Mike Shower will be joining us. No, I mean it this time. Mike Shower will be joining us. He said so. He said he feels a lot better than being sick last week. All right, so we're going to continue. Hour 2 dead ahead, the Michael Duke Show, Common Sense Radio. Okay, Brad Keithley. Final thoughts there, Brad Keithley. I mean, I know he said he's feeling better, so he's going to be here tomorrow. It'll be fine. Final thoughts, Brad, though, as we go through this, because I mean, kind of a weird. That was a weird entree into the whole debate about the PFD. Was the inflation proofing. That would have not been probably the point of entry that I would have taken, but to each his own. I think John and I are probably in alignment on most things regarding the PFD, but that is kind of a weird entree. But any final thoughts here for everything we've been discussing today?
I'm going back to the beginning, Michael. I'm going back to the first segment. I am concerned. I follow EIA and IEA and OPEC religiously. I follow what they say about the oil markets. I follow the oil markets. I do weekly charts that look at what the oil markets are doing. I spend a lot of time on it every day on where oil markets and the prices are going. And at first, when EIA came out with this and the futures markets were sort of someplace else, I thought, okay, occasionally the EIA goes off on a tangent, and maybe this is one of those tangents. But then they stuck to it the second month, and I thought, well, they're serious about this. And now they've stuck to it a third month. and you start seeing the futures market showing the same trend across the remainder of the Alaska fiscal year, and I'm concerned about it. I think this is realistic. And now that Trump solved the Middle East, you don't have that risk sitting in there that always sits underneath the oil markets, and of some sort of flare up in the Middle East that will bring prices back up. And China has built a whole lot of new storage, but they seem to be filling it up. And so you can't count on China continuing to support the market over the remainder of the year. I mean, EIA is saying you can't, and IEA is saying you can't count on China supporting the market over the remainder of the year. So I am concerned and increasingly believe the strength of what EIA is projecting on these prices and the impact of that on Alaska in terms of what we're going to face next spring from a budget standpoint, both the last part of the FY26 budget and making the FY27 budget. What we're going to face next year, if that's where these prices go, is just going to be huge.
Well, because like you were saying earlier, this discussion about the supplemental and, oh, don't worry, we've got this extra money and we've put it aside, and then it's all been sucked up by the fact that the oil prices have plummeted. What's the supplemental going to be? $250 million, next year, just for this current fiscal year, let alone what's coming in the next year. I mean, we've talked about this. This is a significant, challenging time. This is not a time that I would want to step up as governor, quite honestly, personally, but somebody's going to have to do it, and somebody's going to have to take the reins on this thing, and it's going to be a hot mess. Yeah.
The candidates who are talking now about full PFDs, I love the discussion of the full PFD. I think it's important. I think it's central to the Alaska economy. I think it's central to Alaska families, middle and lower income Alaska families. I strongly like candidates who talk about that, but they're going to have to be ready to talk about how the hell they're going to balance the budget otherwise. And the 2018 Dunleavy, we're going to cut our way to it, just ain't going to work this time, because we saw where that went. So those candidates are going to have to be ready. Even the candidates who say, the PFD is important, but maybe we need a more reasonable level. Even those candidates are going to have to be prepared to talk about revenues, because if these prices hit, and again, I have increasing belief that they're going to hit. If these prices hit, it's just going to be very difficult next year, both in balancing out the FY26 budget, but particularly if we're going to $53 in FY27, particularly in putting together the FY27 budget.
Well, I mean, look, a governor could be willing. A governor could be willing, and they could come in with a budget that hacks and slashes and cuts what we're looking for. But you've got to have a legislature that cooperates, and they're not going to do it. There's no political will. A governor can come in and be as strident and as strong and produce a balanced budget that pays a full PFD, shows it all, does what it is, cuts deep into government, but the legislature has got to sign off on it. And that's the problem. The stumbling block right now is the legislature.
Yeah. If I were Bernadette and Shower, I would be putting together a slate of candidates, legislative candidates that supported me. If I were serious about carrying through on what she says she wants to do, I would be putting together a slate of legislative candidates that's supportive on the issue. And I would be running with those saying, we can do it. Not I can do it as governor, because you can't, but we can do it. Vote for me and this slate of candidates, and we will do it. Now that would be realistic, but just running around as a single candidate for governor saying I can do a full PFD and I'll do all these cuts, that's just not going to have credibility.
Yeah, well, I mean, it's aspirational. Again, I keep using that word today. It's my word of the day, apparently, but that's aspirational. You can aspire to do that, but what's the reality going to be? Again, we're reminded about what Dunleavy did. He came forward with that budget that Don Ardwin put together, and I mean, it was great until it wasn't great, until the legislature got a hold of it, and then it was tall man bad, and everybody lost their collective minds. But if we're faced with the reality of no money and that, I don't know. I mean, I just don't know, Brad.
Well, then we're going to have all the PFD eliminate the PFD people pipe up.
Yeah, you know what? Just go enjoy your music, Brad. That's what you need to do. Just go enjoy that music, my
I
friend.
intend to.
I hope you do. I hope you do. Appreciate it, my friend. Thanks for coming on board. We'll see you next week, okay?
Michael, as always, thanks for having me.
All right, folks. That's Brad Keithley, Alaskans for Sustainable Budgets. I don't even know what to say to that at this point. I guess I better figure it out here in the next 60 seconds, huh? All right, we'll be back with more of the Michael Duke Show. Common Sense Radio.
Whoa, buddy. Put that thing back in its holster. We haven't gone anywhere.
I don't understand.
Check out the MichaelDukesShow.com for information on how to get access to the podcast.
Welcome to the party, pal.
The Michael Dukes Show.
The greed and the entitlement is astounding to me.
What more could you want from a low-budget radio program?
This is a dumpster fire.
That's just BS.
It is time to get a new perspective.
We know just what you need, and we've got just the cure. Open wide and prepare for a steaming hot cup of freedom.
I just don't fathom it.
The Michael Dukes Show, streaming live across the world.
Live around the world on the interwebs at michaeldukeshow.com and across the state of Alaska on this, your favorite radio station and or FM translator. Hello, my friends. How are you guys doing? Are you ready to go for hour two? You know, I mean, we were just joking in the last hour, and I was thinking about it last night. I was laying in bed. I was thinking about today's show, and I was just like, you know, it's like Groundhog Day, right? I mean, we've been coming back with Brad. I mean, we've been coming back for 10 years and covering not exactly the same thing, but I mean, you know, for 10 years we've been in a vein, right? We've got a groove that we've kind of carved into it here. And at some point you just, you know, you're carrying, it's this Sisyphean task of you're carrying the water and you're dumping the water. You're carrying back, you're carrying the water, you're dumping you know, you're pushing the stone up the hill and it's rolling back down. You're pushing the stone up the hill and you're rushing it. But I mean, you feel like, you know, you're trying to fill up a 50-gallon water bucket with a spoon, you know, from a half mile away. Carry the spoon a half a mile and you dump it in and you walk. I mean, it's changing, but is it really? Right? You know, is it really? Folks, the things that Brad was just talking about, especially when he was talking about the IAE, the new numbers that are coming out from the IAE. And the worst part, by the way, the worst part about all that was that he did not give you the full picture. He mentioned it later in the program that he cut it off in that first Q4 going only to Q4 of 2026, where we were at $58 a barrel. Okay. And let me pull this over here so you can see it. $58 a barrel. He said, if you go out to 2027, then it goes down to $51 a barrel for 2027. And he was just saying it there in the break, you know, if it was, or in that final segment where Brad was saying, you know, sometimes the EIA goes on a bit of a tangent or a bit of a tear. And for, you know, 1 month, it'll kind of skew off and say, oh, it's going to do this. And then it, you know, kind of It brings itself back on track the following month. But here we go. 1 month, they say it's going to be that the oil prices are going to dump down and drop. And then the second month, they say the same thing. And now you're into the third month. So a whole quarter of them saying this is what's coming. And then the futures market starts to match up along with that. And now you look at these prices and you realize the legislature is building things based on $68 a barrel, the governor on 64. The short-term prices are in the $57, $58 range. And where things are going next year is down into $51 territory. And what does that mean for Alaska? It means that we're going from having, 68 million. Again, it was 2.5 billion in revenues, down to the 64 million. It was going to be 2.1 billion, and down into the $58. And now it's going to be 1.8 billion. And if it goes down even further, we're going to be $1 billion short, $2 billion short overall. I mean, just in the oil pricing alone, it'll drop us $1 billion short, let alone if you start talking about paying a full PFD, which is, that's $2 billion right there, let alone all the other increases that have to happen. I mean, this is the most serious thing to talk about in what's coming up in the coming year. And there's not a single candidate who's been discussing it. Not a single one. Not a single candidate talking about what the futures is doing. In fact, what you've had is the exact opposite. You've had candidates who have been talking about, how the new Pika, these new projects they're going to be a boon for us. They're going to be, again, not understanding that we're actually going to see increased production but less revenue. Right? That the analysis, we're just now, Brad's been talking about that for months on this program, and we're just now seeing some of the news media articles talking about how, this is not going to be as it's not going to be great as it can be. It's not going to be as good, it's going to be tough. And so here we sit at the top of the heap with no more money to spend and a bunch of politicians who are vying for the position with no real, true answers. This, right, Brian just said it. This is the madness known as Alaska. He's not wrong. He's not wrong. This is what Hammond talked about. This is what Hammond talked about with all those crazy politicians who had access to all that oil money, and they just spent it. That was what he was attempting to do. That was what he was attempting to do with the permanent fund, is to, again, put some Alaskan skin in the game and keep them engaged on it. But when push came to shove, it didn't matter. David asked me, why would a candidate address that difficult subject? Why would any candidate talk about reducing the size of government with real specifics when the government unions will ensure that candidate loses? The new state bird is the ostrich sticking its head in the sand. Yeah. No. David's not wrong. Why would any candidate want to address that subject? Well, it's gotta happen, right? Something's gotta happen. Something has got to go on here. I wish I had an immediate answer for how do we fix this. Again, if I was God Emperor for a day, you could fix it, but you can't fix it with the makeup of what we have right now. Even if you put the most fiscally conservative governor in there who, like I said, creates a budget that just rips and tears and even if you put that in, he's got a legislature that's basically going to say no. You've got a legislature that's going to, but what's gonna happen then, right? Now, again, if you were God Emperor, could do everything all for yourself, your word was law, and you could just make it happen, great. We could fix this in a heartbeat. But that's not how it works. That's not how it works. And unfortunately, we have a bunch of folks who are very, very short-sighted when it comes to what's happening around here. We're very short-sighted, and that is frustrating frustrating as heck. Right? That they just cannot see beyond the next election cycle. They can't see beyond the next budget cycle as to what's going to be happening. As long as we get ours now, it's going to be fine. But we can plainly see that it's not going to be fine based on the numbers that Brad just laid out, that if you have $1 billion less in revenue or $500 million less in revenue than what you had this year, which was already a struggle, and you only have $3 billion in readily available cash, and quite honestly, it's not even $3 billion because you have to leave $1 billion in the CBR for cash flow purposes, and there's only just under $3 billion in it right now. You've got just under $2 billion that you have available to you. So how many more years can you make that happen? How many more times can you kick that can down the road before it all comes, there's no more road? There's an abyss there. And oh my God, we're falling in. Right? I mean, the train analogy, the kick the can analogy, all the analogies rolled up into one. The bridge is out. We can see it. The legislature, instead of pulling the brake, decides to shovel more coal into the box. Hold my beer. And then, to add insult to injury, thanks for bringing that up, Miguel. Then we get this. When it's all said and done, the document dropped from Suzanne Downing on Senator Scott Kawasaki's ethics committee violation and determination, where they had this determination of probable cause for Scott Kawasaki, who is using his office assets to campaign, which he's done for many years, in sending e-newsletters and mailers and sending his people out there to do official work. But the official work just happens to coincide with election campaigning issues and everything else. So the ethics committee goes through this whole thing, and they find that that he had violated the thing. They said the committee determined that Senator Kawasaki, whether intentionally or not, violated the provisions of AS 2460.30A5 of the Ethics Act by using state funds for political fundraising or campaigning. He also violated AS 2460.30C by printing and distributing mass mailings as noted before during a campaign period. A mass mailing is considered to be political if it is from or about a legislature who is a candidate for election. So they determined he did the bad thing. He violated the ethics law. Recommendation. The committee determined corrective action is not warranted on this matter. The committee reminds Scott Kawasaki the ethics committee and staff are available to provide clarification. And so they determined that he broke the law. They determined that he violated the provisions of, i.e., he broke the law. And they're saying corrective action is not needed. But we remind you that we're here to available to provide clarification so you can know whether or not you're going to break the law by coming to us and telling us that, we can prevent a similar occurrence in the future. Wow. I mean, just wow, right? I mean, we're gonna just remember all this stuff and no penalty at all. Nothing punitive, no slap on the wrist. In fact, this came out over a month ago and it's just getting dropped right now. Over a month ago. I mean, where is the where is the inspector general? Where is the attorney? Where is somebody up here to defend ourselves? I mean, that's I just don't even know. Reached by phone on Friday. This is somebody comments in the thing here. Kawasaki said, it's just sort of disappointing to have this be said and politicized, and then it becomes a potential issue in the future campaign. It was just a technical violation. And I think it was unfairly weaponized against us just because of who we were running. Oh, really? Give me a break. Try and gaslight me more, Scott. It's not my fault. It's the other side's fault that this got exposed to the. I mean, again, I just technically broke the law. I mean, I just technically I broke the law. I mean, I was just speeding and ran that stoplight and technically I broke the law, but it's just a technicality, just a technical violation. Jesus. The irony that you have an ethics violation with no penalty just kind of raises the whole question about ethics committees as a whole. I mean, if that's the case, what about ethics committee as a whole? If there's no ethics, if there's no penalties for violations, where are your ethics? What does it matter then? What, to quote a famous, what difference does it make? What All right, I gotta go before I lose my ever-loving mind. Gotta go. All right, we got more coming up. One more segment. Oh, I don't even know what I'm going to talk about yet because I'm a little pissy about this. All right, we're going to be back. The Michael Duke Show. Common sense, liberty-based, free-thinking radio. We're continuing more after this.
Listened to by more staffers in Juneau than any other show because their bosses told them to. And after what they just heard, oh man, they're going to be pissed.
You're a bad, bad man.
The Michael Duke Show.
Okay. Oh man, my brain just melt down right there. All right, let's see what else is going on. My tilt light has always been on. I agree with that. What? The AI data banks will consume so much energy and water they cannot possibly be built in the lower 48. On the other hand, if Alaska had lots of natural gas, it would be a very good fit for those AI data banks. The one being built in Wyoming will consume more than 126 billion gallons of water annually. It may even lead to a drying up of the aquifer. Wow. I should do some more reading on AI. That's some crazy stuff. Are we surprised? He does nothing but campaign all the time anyway. Yeah. Let's see. Tim is talking about investing in our future. Would you expect anything else? Brian says it's beyond sad when my expectation of government is corruption. And that's true. Absolutely true. David Boyle said a legislator told him the state will have a supplemental of more than $160 million. Where's that going to come from? Yeah. Let's see. The ethics committee is unethical. There's some irony there, right? I mean, right? There's also no penalty for violating the oath of office, says Frank. The ethics committee needs an ethics committee. Joel says, my opinion of Scott was low, but holy smokes, what hot garbage. Yeah. I mean, I love how Scott's all, this is a technicality, and Leslie reported me, how dare you? No, she didn't. Barb Tyndall did, and it's not like Kawasaki is a shining star of human decency. He lied his whole campaign trail about Leslie. Yes, he did. Yes, he did. I mean, okay, says Rick says, okay, this is depressing. I think I'll go stand out in the rain. Yeah, well, I mean, you know, you just, I don't know, guys. We definitely, excuse me, we're definitely going to need some Chris story time. We're definitely going to need some. My wife said, she said, do you know that you have a tell? I said, what? She goes, when you don't want to talk about something, you yawn. And I just yawned big because I don't want to talk about this anymore. It hurts my feelings, makes me angry, and I don't need to be angry. I don't need to be angry today. But by God, this is, you know, I mean, that's just the icing on the cake for today, right? All this talk about how we're going to spend all this money and how we're going to do all these things. And then we have an example of the violation of the law and everything else. And then he's just like, technically, it's just a technical violation. I mean, really? That's your thing? It's just a technical. I mean, technically, I may have run over that mother with 2 children, but technically it's just a violation of the law that I was speeding and didn't stop at the red light, you know. Technically, that's, oh my God. Ugh, technically, it's a technicality. Okay. All right. I need a drink. It's 7:00 in the morning and I need a drink. All right, let's son of a bitch.
The Michael Duke Show. Seriously humorous with a pinch of intellect. Sorry. That is humorous. Here's Michael Dukes.
I had to take a musical interlude there for a minute because it's getting so angry. So angry about this whole thing. Because, you know, it would be one thing if all of this stuff just came out of the blue, right? If all of this stuff just came out of the blue and it was like, oh man, we just didn't see that coming. And oh man, it's so shocking that this is you know, but again, this was right here. We saw, it wasn't like we knew. We've been talking about this on this program for years. For years, we've been talking about this. And just like right now, you're like, oh, well, you know, and this whole concept of it's a technical violation. Oh. Actually, it's a technical violation. I think it was unfairly weaponized against us. Actually, really? You mouth breather. This is the thing. It's a technical violation, and it was unfairly weaponized against us just because of who we were running against. It was a violation, technical or otherwise. Shouldn't that be important? I mean, shouldn't that be important? But so, I mean, next time I get pulled over for speeding, I'll just look at the officer and go, oh, excuse me, officer, that's just actually, that's just a technical violation. Maybe that's what I'll just do. I mean, if the senator could get a technical violation, that's just technically, right? How is it? I mean, nothing changes? No corrective measures? No sternly worded letter? No. It wasn't even a sternly worded letter. No. The thing, oh my God. The thing said, the committee determined that, wait a second. Sorry. Let me find my voice. Are you ready? The committee determined that corrective action is not warranted in this matter. The committee reminds Senator Kawasaki the Ethics Committee and staff are available to provide clarification, informal advice, or advisory options and opinions to prevent a similar occurrence in the future. That's what it's not even a you bad boy, just don't do it again. It is no action is warranted. We just remind you that we're here to help you to wash your backside, to clean your toe. Really? That's the answer? Don't worry about it. I mean, we all make mistakes. I mean, we all run down small children in the street or, set houses on fire. It's no big deal. Next time just come to us and we'll prevent similar occurrences from occurring in the future. Oh, Mike, you're being so hyperbolic. This is not even on comparative. I'm just saying technically, that's a technical violation, right? We got this whole ethics committee that got together and people took their time out and they probably got lawyers and they tried to put this all together. And there is a law on the books that talks about this and everything. So there probably should be some kind of, penalty phase or something, something should be happening here. All these people, you guys are getting paid, you get the committee, the staff and everything. They're getting paid. There's somebody, maybe something should happen. What good are the laws that we have on the books? You want to know how you get an Irish democracy? This is it. Right here. We put laws on the books that prevent you from doing certain things. In this case, using your position as a leader, using your elected position for advantage in a race against somebody, as an incumbent, against somebody who's trying to unseat you. And we have those laws in place for a reason, so that you cannot abuse that power. And then when you technically abuse that power, there is no repercussions and no, in fact, again, not even a sternly worded letter in your file. This is a joke. This whole thing is a joke. It's just and quite honestly, I mean, I know some of the people on this committee, this ethics committee. The ethics committee, made up of Joyce Anderson, chair, Deb Fancher, H. Connor Thomas, Skip Cook, who I know, Carl White, Senator Gary Stevens, and Senator Robert Yunt. I want to know. No, I'm not even going to do it. I'm not even going to do it. Never mind. I don't want to know. I don't want to know how they all voted on this. I really don't. Because I'm going to lose some serious respect for people over this. Technically, it's a technical violation. Oh my. You know what? What does it matter then? If this law doesn't matter, then what do any laws matter? I mean, and I'm not being, again, I'm not trying to reducto ridiculum, right? Where you reduce it to the ridiculous. I'm trying to literally say, if this law doesn't matter, then what do the other laws matter? Any other laws? We've decided at this time that there's no corrective action is warranted in this matter. We've decided to use our discretion because technically he's violated the law, but, it was, okay, it doesn't matter. I'm all for some good discretion here, but shouldn't there be something at least strongly worded, and why keep it secret kind of question mark? You know what? I'm getting all worked up over. I don't even care. I don't even care anymore. I don't even care. I'm going to sit back on my porch and smoke a cigar, drink some whiskey, pet my dog, and watch the world burn. That's kind of where I'm at right now with all this stuff, because none of these politicians in the state of Alaska, they don't give two craps about you, folks. They just want to make sure that they're reelected and that they have their money. It's their money. You heard that, right? Dandy Josephson talking about that $50 million from that Crum invested. It's just that, we're suspicious. We don't know when we can have our $50 million back. That says it all right there, folks. It's their 50. It's not your 50 million. It's not the public's 50. It's theirs. That's what they don't care. And you know what's going to happen the minute that the bottom falls out of all this? You know what's going to happen? You'll see a whole bunch of people retire from the legislature, and they're never to be heard from again. Because they're either going to go sit on they're going to leave the state or do whatever. It's not going to matter. You're going to be stuck holding the sticky end of the lollipop. That's what's going to happen. That, the bottom's going to drop out and somebody's going to hand you the sticky end of the lollipop and say, it's nice to see you. Technically, we're leaving. And they're gone. I have no more words. Yep, no more words. Chris Story up next. You guys are going to need Chris Story up next. That's right.
Your mental suppository. The Michael Duke Show.
I'm so pissed right now. I mean, you have no idea. I mean, what the I just I am going to go over here to see what's going on. I'm sorry. I'm scrolling backwards here. The day drinking begins. I just, and I'm not trying, again, I'm not trying to be hyperbolic. The point is, folks, if this law doesn't matter, then what do any of the other laws matter as well? Right? If he can get a pass from his friends on the ethics committee, then what does it matter? What does it matter? It doesn't. It doesn't. Well, you know, it wasn't. It was a technical violation. It wasn't that egregious, and it wasn't intentionally. Probably. I mean, even though we don't know if it was intentional. In fact, our statement says it may have been intentional or not, but we just don't know, and so we're just not going to do anything about it. This is why conservatives don't vote. They feel just like Michael. And I could see that if this is how I felt about everything every day, yeah. Well, no, I would vote. I still would vote, but I would just probably burn it down. I mean, you know, that would be my vote. Debbie said, it's always bothered me that Kawasaki will send me a birthday card every year at my home address, and he has never sent one to my husband. After a couple of years and I would call the Fairbanks office and told them I don't appreciate it and finally stopped a couple of years ago. Now it's started again. Yeah. Oh, he's super good at that high touch outreach. He's super good at that. Okay. Mike Quant predicts that there will be some excellent Duke shorts come out of this show today. Possibly. I don't. You may not want any shorts to come out of this today. That's all I'm saying right now. You may not want it. Yes, you know what? I could have a little bit of Irish in my coffee this morning. Yes, please. Yes, please. All right, let's go over to Mr. Story and test the waters here to see what he's doing. Hello, brother. What are you doing?
Good morning. It's like a warm bubble bath I've just slipped into here.
Oh, is that what it is? That was just me. I had tacos last night.
You're talking about changing your shorts. I don't know.
Yeah, no, save us, Chris. Save us from ourselves. Because
what's ironic is my topic for today is the wheel of misfortune. So I don't know. Maybe this is perfect timing.
Maybe this is the time to discuss it, huh? Okay.
Yeah.
I mean, you don't ever feel this way. I mean, I get the feeling that you don't ever feel this way, right? That you're just like this nearly perfect.
What way? I mean, describe the way in a sentence.
Oh, that I want to burn the world down right now, right? That I'm so pissed about this kind of stuff, this injustice of, and it's not just the Kawasaki thing. You know, I mean, in the scheme of the world, his infractions are fairly minor, but it's the fact that they just basically said, no, we don't think we don't really need to punish him. Even though he's an elected official, he's supposed to be held to a higher standard, you know, ethics and everything. But this is just the culmination of a lot of different things, right? Where they just don't seem to care about the fact that we don't have any more money, and yet they continue to want to spend it. And, you know, I mean, it's kind of that frustration level, right? Of, I don't want to try and fix it anymore. Now I just feel like I want to, you know, sit back on the porch and watch the world burn just so that we can get a fresh start at some point. That's kind of, sometimes we feel like this.
So you feel powerless in this situation, would you say?
No, I don't know if I feel powerless. I mean, I've got a 5-gallon can of gasoline. I could make it happen. I mean, no, I mean, I don't feel if I feel, I guess frustrated, I guess is what it is. It's not powerlessness. It's frustration.
And yes, interesting. Yeah, no, it's yeah, no, I
What are
think
you, Freud? What are
it's
you,
very
Freud,
natural.
this
So you
morning?
say I don't
Tell
feel that
me
way. I
how.
feel that way. I feel that way all the time. No, I feel that way all the time. The only thing that I've found that helps resolve it is to really isolate what I care most about and what can I do about it. There's a great book called The One Thing by Gary Keller. And ironically, it's not about real estate, even though he started a real estate company. It's about what's the one thing that I could do right now that would make everything else unnecessary or unimportant, would become unnecessary or unimportant. And so the one thing, for example, with my hyperbolic governmental frustration was property tax. What's the one thing I could do as a realtor, as an investor and a broker? The one thing I could do is create an amendment to the law which overtaxes us.
Hold on.
The Michael Duke Show, proudly splitting the left versus right dichotomy. Yeah, I had to look that word up too. I don't think it means what he thinks it means. Here he is, though. That guy, Michael Dukes, the one with the show.
Okay, Chris Story, the man from Homer, joins us this morning, and I asked him for a little bit of advice before the show because obviously I'm highly agitated today, and he was asking me all the questions. Are you dejected? Are you sad? Are you mad? I said, I'm frustrated, and he said he feels the same way too, and he found that there was only one way to deal with that. Chris, I'm sorry, I had to interrupt you to join back to the radio. What is the one way that you found in dealing with this frustration with government?
Bourbon. No, I'm just kidding. I didn't say that.
After bourbon.
No,
Yeah.
it's doing something. Isolating what's the one thing, and kind of taking a page out of Gary Keller's fantastic book, The One Thing, which would suggest, is there one thing you can do? And yes, there is. What's the one thing you can do right now that would make everything else unnecessary or unimportant relative to pick a topic, pick a thing. And for me, it's relative to overtaxation. So what's the one thing I can do? I can complain about it. I can write letters to my editor. I can holler. I can try to contact any elected representative. But even still, I haven't offered a solution. So the one thing I can do is create a solution. In this instance, it's an amendment to Title 29 in the state statute, which is governing our property taxes and how property taxes are assessed and then taxed in every single borough. And so now, while we don't have a completion or any sort of even date on the calendar when it will be looked at by the whole of the legislature, it's something I can do. And it's something way more productive for me than to just be upset about it. And so that's the off ramp to the Looney Tune, highway, is to do something. We can't fix everything, but there's something you can do about the current circumstance that maybe even only you can do. Maybe there's something that only you are suited right now to do. What's that one thing? And then set about doing it.
Okay. Well, I appreciate that little sidebar there for my mental health break. But you had a topic that you wanted to bring on, and I've been so agitated that I've already forgotten what the topic was because I'm a bad radio host. So what was it that we were going to talk about today?
To the contrary, and I think that is your superpower, is organizing people statewide. And I know people listen to your podcast around the country and around the world, but I think organizing people through the radio, I think, is your superpower. And if I were to say that's the one thing that you have ultimate control over, and I think you do a great job of highlighting and pointing out where the cockroaches are in the room, and you shine that light beautifully. But my one topic today is the Wheel of Misfortune. And the Wheel of Misfortune, I've been watching a Bond movie lately. It's called Die Another Day, I believe, with Pierce Brosnan. I don't know how I happened upon it, but I've just been watching it here and there when I have a few moments. And I was just thinking, misfortune, that'd be a great Bond girl, as it were. But actually, by definition, misfortune is a state of bad luck. and fortuna being the root of that, and miss meaning, bad. There's this idea, I guess, then that I wonder, is somebody who has fortune a product of good luck? Does it boil down to luck? And I say no, except for the lottery winners. Lottery winners in life do, obviously, it boils down to luck. But even still, they had to go buy a ticket. They had to take some action, or you don't win the lottery. I had a friend who won everything. He was constantly winning something. And trivial, mundane, stupid little things, didn't matter. He was constantly winning. And I was one day complaining about it. Like, man, Scott wins everything. This is crazy. And then I realized, wait a minute, he enters everything. I enter nothing. I don't ever sign up for these things. He would send money back to his parents and they would buy a Massachusetts state lottery ticket for him. He would enter every single little thing. So he was constantly doing something and looked really lucky as a result of it. But the wheel of misfortune can run away with your life, but it's really not one thing. The wheel of misfortune didn't start turning because of one event. It's a cascading of decisions or indecisions, and it's a whole event cycle. It isn't just one thing. So to turn it around or create a wheel of fortune in your life, it's not going to just come down to one thing either. It's going to be a cascading event of new decisions, new actions, and new goals that you set for yourself, and then get busy.
So how do we walk us down the path here? How do we get started?
Well, look, you'd probably expect I would say, why don't you pick up a copy of my brand new book, The Schoolyard Millionaire, The Wheel of Life and Wealth? You'd probably expect I would say that, but I'm not going to. I'm not going to direct you to Amazon.com and type in The Wheel of Life and Wealth by Chris Story. No, I'm not going to do that at all. What I'm going to do is suggest that we just go through the 7 spokes of the wheel together. A philosophy my grandson asked me one question, and then I spent another year thinking about it, and then ultimately writing this book. And he asked me the question, Papa, can I become a millionaire? And of course, I was like, yes, you can, yada, yada. Then I was like, wait a minute, what would I tell him? What do I want to leave? What fingerprints on the lives of my grandchildren and eventually great-grandchildren do I want to leave? And I realized it would come down to some number of things in this philosophy, and starts with your health. Absent health, all the wealth in the world means nothing. You could have the winning lottery ticket for, the Virginia State Lottery, $2 billion in your pocket, and then a diagnosis in your left pocket that changes your entire world. So money alone, absent health, means nothing. Then the next spoke on this wheel of life and wealth is who you have in your life, who pours into your life, and also whose lives do you pour into, and then who are you becoming in life? Who are you now versus who will you be in 10 or 20 years? It's the decisions you make between now and then will ultimately determine that. But also, who do you have in your life? And then we come to wealth, because yes, money actually does matter. You got to have a certain amount. Les Brown said, money won't make you happy, but everybody want to find out for themselves. And that's really true. Money alone doesn't make you happy, but you got to have a base level. You know that you experience a certain level of happiness up to a certain base level of money. And then beyond that, it boils down to prosperity. And prosperity is what Buckminster Fuller described prosperity as, is the amount of money you have going forward without trading time for it, without working for it, using air quotes. These are your investments. But beyond investments that pay you back later, it's about being of service. I had the honor to speak to Rotary last week, and I mean, we're talking about a group that is constantly of service for their community for, I don't know, what is that, 7,500-year-old group all around the country and now the world, serving other people. That is prosperity, when you can be of service to other people. Next spoke on the wheel of life and wealth is adventure and travel. And maybe you're not in a position to travel right now or anymore in your life, but that doesn't mean you can't have adventure where you are with what you've got. You can have extraordinary adventures right here in your own hometown, wherever that is. And part of that is, who do you have in your life? But you can make life really interesting by looking at life as a game, like making a game out of it. So adventure and travel are really important. Then I wanted my grandkids to know about giving and to understand the law of reciprocity. And it demands that when you give, as Emerson pointed out, you cannot help but get. but give anyway. It's not why you give,
Right.
but understanding that the law of reciprocity will kick in, but you give anyway, and you be of a giving spirit. And then finally, it comes down to faith. I think faith in your own life, faith in the fact that you were born on purpose. Against all odds, you exist, which you shouldn't. There's no mathematical formula that says you should have been born. Nope, it's against the odds that you were even born and still alive today. Have faith in your destiny and have faith in God. For me, you could say something greater. Somebody could say, well, I don't believe in God. Okay, fine. Have faith in something greater than yourself. We are talking about the same thing, but you can call it what you want. I say it's God, but having faith is very important.
I mean, it's a great breakdown, my friend. Although I think you may need to have your dog checked for sleep apnea. I'm just saying right now, he is definitely.
It's actually, you're hearing the power of two, my friend. That's multiplicity. That is two Cavalier King Charles in concert, exhausted from being so cute and special. And they're literally, believe it or not, they are sleeping 4 feet from me.
4 feet from. I mean, people are like,
in my lap.
Man. Yeah, because it sounds like because it says the snoring dog is so funny. It makes the show today, is what somebody just said. That it's making your points for you. That it's so exhausting to try and be upset and agitated. You just need to, find your why and look at the spokes of life on the wheel and realize that that's much easier than being angry and being agitated all the time. So that's good stuff. All right. Chris, final thoughts for today on the wheel of misfortune, stepping off the wheel of misfortune onto the wheel of fortune, and just getting our lives back on track.
I think ultimately, if I could leave with one impression or one idea, it's that you have control not over what happens in government or what happens even at your city hall, for that matter, or what happens maybe with your extended family, but you do have complete control over the gap. And the gap is between stimulus and response, as very well pointed out by Viktor Frankl in Man's Search for Meaning. There exists a gap between what happens in your life and how you respond to it. And when you live in that gap and you really look at the world through the eyes of distance and legacy, and what are you living a legacy worth leaving, then you can respond within that gap accordingly and change the outcome for you and those around you.
But you got to take that first step, a little bit of a self-analysis, which sometimes is the hardest part, but do a little bit of that. Get yourself together. Chris Story, the man from Homer, you can find him at ilovehomeralaska.com. Of course, all his books are available there, including his latest, The Schoolyard Millionaire. Chris, thank you so much, my friend. It was good to talk with you today.
My pleasure. Thank you, Michael.
All right, my friend. Good to talk. All right, folks. Tomorrow, State Senator Mike Shower, candidate for lieutenant governor, is going to be joining us in hour 2. We'll see who's with us in hour 1 tomorrow. All right. Be kind. Love one another. Live well. Okay, well, I don't know if it was the snoring dogs or what, but I'm a little more calm. I get so agitated at the injustice of it all, right? It just feels like it's one law for me, another for thee kind of thing that goes on all the time. It's astonishing that there seems to be very little penalty for those who are ostensibly supposed to be held to a higher standard. And quite honestly, there's no reaction that we can get from folks who should know better, who should be paying closer attention to what's going on, money-wise, and seeing that we're about to hit the financial wall. That's the problem. And they just seem to act like it doesn't matter. That there will always be money there. That I can't possibly be out of money. I've still got checks left, right? I mean, that kind of reaction. and that somehow we are too big to fail. And I just want to make it very clear. We could fail. We are not too big to fail. It could be a problem. Next year will tell, I guess. We'll see where we go from there. All right. Thanks so much, my friends. We will see you guys tomorrow.
We've shed our terrestrial radio skin, and now we are slimy lizard internet people. It's the Michael Duke Show.